Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we're holding steady in terms of gains at this point in time. So currently we have the mid-cap index, which is up around 1.4%. No complaints, which is really common for the Nifty. There's basically been a good reaction to the RBI policy and the change in the stance to neutral from withdrawal of accommodation. So that seems to have boded well for the markets as a whole. The Bank Nifty up around 101 odd points. The advanced decline ratio holding steadily on the positive terrain as well. Hi, Vinny.
Hi, Ekta. Good afternoon. A good day turning in, after all the information that we got in from RBI. Not a bad day, at least, coming in for the markets today. Even the mid and small cap, they're managing to hold on to some bit of a gain there. Also, let's pull up some of these individual names that are doing well. We have Escorts Kubota, that's holding on to good gains. We have Excite, auto ancillaries. They are managing to hold on to some bit of a gain. What's not doing well today is the FMCG pack. So Nifty FMCG, that's a bit under pressure today. At one point of time, it was trading down almost 8/10 to 9/10% in trade. As of now, also with a decline of 7/10%. Pull up names like Nestle, Britannia among the top losers that are coming in on the Nifty FMCG side as well. But yes, interesting day coming in. Other than that, everything is managing to hold on to some bit of a gain, some bit of a pressure just from the FMCG bank.
Yes, absolutely. But as of now, we do have a guest lined up. We have our guests lined up to take us through all the queries that we have this afternoon. So joining us, we have Ashish Kyal of Wave Strategy Advisors and Parthiv Shah, Director, Tracom Stock Brokers, to answer all of your questions. Ashish as well as Parthiv, welcome to the show. Well, before we, kick off the show in terms of queries, Ashish, it's been a steady day overall for the markets. But a lot of these pharmaceutical stocks are doing well. Divi's is up 8%, Cipla's up around 3-odd%. What would your approach be, one, towards the Nifty as well as towards these specific stocks?
Hi, afternoon to you and all the viewers. If you look at Nifty, we can clearly see there has been a smart recovery from the lower end when around 24,700, which was touched about yesterday and day before. And from there, Nifty has managed to sustain about the 25,000 mark. But having said that, I think the upside move, there is not much of a short covering that we saw, and Nifty is just hovering around 25,100. So I'm expecting that it's going to be consolidating now because we saw a very steep decline from 26,200 levels to 24,700, and now it should consolidate within a range of 25,440 on the upside as the major hurdle, and on the downside the support is going to be around 24,900. So that's the range. If you get a dip around 25,050, that can be used as a buying opportunity for the target of 25,200 on the upside over short term, as long as 24,900 remains intact. So that's the target. As far as pharma space is concerned, I think it's not only now, it has been almost 6 months that the pharma stocks are doing well. If you look at Dr. Reddy, Divi's or Cipla or any other pharmaceutical names, most of them are outperforming the market, and that's nearly happening when the interest rates are at the highs, and we can clearly see during these such scenarios, pharma and FMCG start doing good. So pharma, Cipla especially stands out because the stock has been nearing to the 52-week high again, and there is absolutely no stopping to the stock. It's moving independent to the broader market. We can clearly see a strong outperformance today as well. So one can create long positions in Cipla even at current levels. We can expect the target on the upside to be around 1750 levels over short term, and on the downside the support for the stock can be at 1640. So the entire pharma cycle, I think, is going to be running up for nearly next 6 months to 1 year. So any dips in pharma stocks can be used as a buying opportunity.
Okay, thanks so much for that view on the Nifty as well as the Nifty Pharma, Ashish, and good afternoon to you as well. But on that note, let's get started with all those queries on the stocks that viewers have. And Parthiv, this one is for you. Good afternoon. We have Achyuta, who's writing to us from Tamil Nadu. Now, he's holding 30 shares of Raymond Lifestyle at a price of 2,500 rupees per share. Wants to know whether they could actually book their losses in the stock because the stock has been falling, or should they continue to hold this? What's the view on this one?
Good afternoon to you all. See, our sense is that probably, I think the investor bought into this company right after the demerger, and the price was hovering a lot higher. And thanks to the technical reasons in terms of selling of certain shareholders, I think the price corrected. I think at these juncture, I think the stock is extremely cheap in terms of valuations, especially if I compare with a lot of its peer sets. And I think in terms of Raymond's lifestyle, I think this is the type of company that a lot of long-term investors wanted to bet on. Completely a B2C company, very, very strong brand. I think the market did had certain doubts in terms of how the execution would be. But I think now if you look into the management, I think it's totally professionalized. I think there are top-notch corporate leaders who are heading this company. And I think they have a very good vertical integration as well, and a lot of backward integration capability also. And probably we are heading into the festive season, along with the fact that, India having a fantastic demographics in terms of very young median age. I think going ahead, I think the demand from the marriage season also should be very strong. So I think I would not suggest the investor to exit. Rather, if at all he sees a further decline of 5% something, I think certainly add on to your position and cost average and hold on to this position for the next 1.5 years.
Okay, all right. Well, let's get in another query now. We have KVG Rao, who's on the line from Andhra Pradesh. He's made investments in Escorts Kubota, and he's asking, he has a query on the, and in fact, he's joining in on the line. Mr. Rao, go ahead.
Hello, good afternoon, madam.
Good afternoon. Tell us, you have a question on Escorts Kubota.
Hello.
Yes, go ahead. Yes, Mr. Rao, is my voice reaching you? Okay,
Hello.
I think we. Yes, go ahead, sir.
Hello, good afternoon, madam.
Good afternoon. If you could tell us your query on Escorts.
Yes, madam.
Go ahead and tell us your query on Escorts.
Yes, madam.
Okay, well, I think there's some issue with the line, so we'll try and read the query out. Mr. Rao is sitting on a fantastic profit there. His buy price is 1,000 odd rupees. He's bought around 2,000 odd shares. He's sitting on a good profit. Wants to know what to do with this particular investment. Well, Ashish, let's start with you. The stock is in focus because there's an MK upgrade also, which has come through. But overall, what's your sense on the technicals?
See, firstly, I would like to congratulate him because he has been riding all the way on the upside for this stock. It's not very often you see 2-3 times of or more than that of return that the investor holds on. And if you look at Escorts weekly chart, that's very interesting. You can see a long shadow on the downside, which indicates that there has been a sharp pullback from the lower levels. Good accumulation look to have happened on the lower levels. And I would suggest continue to hold on to the stock. The important support for the stock has been around 3,600 levels. So keep that as a stop loss. And on the upside, we can expect the stock to even cross back above 4,500, head towards that 5,000 mark. So continue to ride onto the trend. There is absolutely no change. The weekly charts look positive. Daily has been bullish. So keep riding the trend on the upside.
Okay, keep riding the trend on the upside. That's the word on coming in from Ashish on Escorts. But Parthiv, what's your word? Today we have a note that came in from MK as well. They are also quite bullish on Escorts Kubota. You too are positive on this one?
Oh, yes, absolutely. I think it's been a brilliant investment for the investor. And if you see from FY23 to 24, they have increased their market share in the tractor division to 11.6% vis-a-vis 10.3%. And this is the best thing to have happened to Escort shareholders, that a company like Kubota, who's a multinational giant from Japan, brought in and all its expertise. And going ahead, I think they have massive plans. They have a target of almost tripling their revenues in the next 4 to 5 years. And not only that, I think they're putting up a very huge plant for tractors, along with the ancillaries like engines, etc., which will increase the capacity to almost 3 lakh tractors per annum. And this is going to come at a cost of around 400 crores. Plus, they're setting up a lot of R&D centers, and even in terms of exports, they have a 5.1% export share. I think we are very upbeat on this company, and the investors' entry point has been brilliant. Even Kubota had paid around $1,800 per share. So certainly hold on for the very long term.
Okay, all right. So that's the word coming in on Escorts Kubota. Well, for the markets, it's holding very steady at this point in time. Just look at the way Divi's Labs has zoomed. That stock is up around 8%. The street is anticipating that maybe there could be some benefit from the GLP-1 drug opportunity. And that seems to be the key reason that's mentioned in a Citi note, which is initiated coverage on that particular stock. with a target price of over 6,000 odd rupees, already hit those levels today. We'll take a quick break. We'll answer more queries on the other side. Stay tuned.
Welcome back. You're watching your stocks on CNBC-TV18, and let's keep it going with all the stock-related queries. Our experts for today is Ashish as well as Parthiv. And this next query is on Ola Electric. Shalu Arora, who's writing to us from New Delhi. She's holding 80 shares of Ola Electric at a price of 95 rupees per share. She's asking if one needs to be worried regarding the current, negative sentiment that we're seeing coming in, plus the consumer complaints against the two-wheeler maker. Parthiv, I'm going to take it to you. What's your word on Ola Electric? A lot of concerns coming around this one. We've seen the stock see a fall as well in the recent times.
Yeah, I think it's a very difficult stock to track and give prediction on, because I think they're trying to disrupt the industry, and they did extremely well in terms of being the market leader in the EV two-wheeler space. And now that, I think the biggest concern being that there are a lot of quality issues emerging, and I think the management has been very vocal of trying to address them. I think the major bet of the market for this company is more on the battery plant, and how that can reduce the cost of production and help this company to kind of spend more capex towards services and maintenance and spares. But I think for the short to medium term, thanks to the fact that the company has been a lot in news for the wrong reasons, the stock could stay on the sideline. So I would suggest, I think, better on any rallies from here, I think probably exit this counter, and we'll have to monitor the company, how it performs in terms of its warranties. But I think it's a tricky situation here, and on any upsides, I think I would suggest an exit.
Okay, all right. Parthiv as well, thank you very much, as well as Ashish, thank you very much for joining in and taking us through all of the queries this afternoon. Well, for the markets, it's in steady state, but the bank nifty has given up gains. In fact, it's probably just about going to slip into the red as we speak, just about holding in the green by the skin of its teeth. The advanced decline ratio continues to still be positive. Let's see whether that's maintained. Mid-cap index holding up well. That's all the time that we have on this show. Closing that up next.